Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ALCOA CORP quarterly report. ALCOA Corporation offers a diverse range of businesses and services across various sectors. These include bauxite mining alumina, refining aluminum production energy generation, supply contracts for alumina to industrial chemical product manufacturers, primary aluminum sales in the form of alloy ingot or value-add ingot 2. Plus transportation industry, plus building and construction sector, plus packaging market, plus wire industry, plus other industrial markets, wholesale electricity sales too, plus traders, plus large industrial consumers, plus distribution companies, plus generation companies. The ALCOA Corp stock price has experienced significant fluctuations over the past year due to various news and market trends. Despite reporting strong quarterly results, including exceeding earnings expectations in Q4 2024 and CONE 2025, the stock's performance was impacted by several factors. One major concern was the permanent closure of its Kwinana alumina refinery in Western Australia, which led to significant restructuring charges. Additionally, lower alumina and aluminum prices, as well as increased tariff costs, affected ALCOA's operations and cash flow. However, the company's resilience to tariffs and effective management strategy helped offset some of these negative impacts. The stock saw a nearly 13% surge on October 23, 2025, after ALCOA announced its Q3 2025 results, which showed revenue of $2.99 billion and a net income of $232 million. The broader aluminum market trends also played a significant role in shaping the stock's performance. The global aluminum market experienced strong growth, driven by increased demand from various sectors. However, concerns about a supply deficit and tariff impacts continued to affect trade and potentially reduce market growth forecasts. Overall, ALCOA Corp's stock price has been influenced by a complex interplay of company-specific news and broader market trends, resulting in significant fluctuations over the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in aluminum prices, higher volumes and prices from bauxite offtake agreements, the restart of a smelter, and joint ventures. Additionally, favorable tax decisions and debt repositioning have also contributed to revenue growth. Furthermore, gains on the sale of interests in Saudi Arabia have also positively impacted revenue. On the other hand, revenue decline is primarily driven by the permanent closure of a refinery, lower volumes and prices from bauxite agreements, unfavorable currency impacts, and decreased shipments of aluminum and alumina. Net income and profit margins underwent significant changes between Q3 2024 and Q3 2025. Net income increased by a substantial 156%, transforming from a loss of $178 million to a profit of $917 million for the 9 months ended September 30, 2025. This improvement was driven by a decrease in net gain-loss from investing activities and restructuring charges. However, profit margins experienced a decline from approximately 17.8% to around 7.1% in Q3 2025. Despite this drop, profit margins improved significantly due to the aforementioned factors contributing to increased net income. The increase in cash provided from operations also played a crucial role in this improvement. The company is indeed generating positive operating cash flow. According to the financial summary, the cash provided from operations has increased significantly from $207 in 2024 to $648 in 2025, indicating a substantial improvement in the company's ability to generate cash from its core business activities. This increase of $441 demonstrates a notable shift towards a more financially stable position for the company. The company's debt level and interest expenses have undergone significant changes. The debt level increased by $108 million from $2,470 to $2,578, primarily due to new issuances and tender offers of long-term debt. This increase is reflected in the short-term borrowings, which rose from $45 to $51. Conversely, interest expenses decreased by $11 million from $44 million to $33 million. Despite the rise in long-term debt, the company's interest expenses have actually decreased in both quarterly and year-to-date periods. This suggests that the increased debt has not yet resulted in higher interest costs for the company. Management is optimistic about the company's future prospects. Key strategies include prioritizing environmental, social, and governance matters, simplifying operations by optimizing its asset portfolio, and accessing liquidity sources to support cash needs. The company believes it has sufficient resources to fund operating and investing activities through projected cash flows and other options. The company has made several strategic moves through acquisitions and divestitures. Notably, ALCOA acquired Madden shares in July 2025. On the other hand, the company has disposed of various interests to optimize its portfolio. In terms of divestitures, the company sold its interest in the Madden joint venture, resulting in a gain that is not specified. Additionally, it withdrew disputed tax claims and received a refund of $78, $120, along with reclassifying accrued cash taxes. Furthermore, the sale of its interest in the Saudi Arabia joint venture yielded $150, while the disposal of a non-core investment generated $11. Overall, these transactions demonstrate the company's efforts to streamline its operations and focus on core activities. ALCOA Corporation has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with $78 million and $63 million distributed in 2025 and 2024, respectively. Additionally, ALCOA has utilized a common stock repurchase program approved by its board of directors, allowing for up to $500 million in share buybacks. This dual approach to returning value to shareholders reflects the company's confidence in its financial position and its commitment to rewarding investors. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals two pressing concerns that warrant attention. Firstly, there is a significant buildup in inventory levels across various categories, including finished goods, work in process, bauxite and alumina, purchased raw materials, and operating supplies. This increase in inventory has resulted in a $302 million rise in cost of goods sold from Q3 2024 to Q3 2025. Furthermore, the company's supply chain is facing disruptions due to permanent closures and reduced operations at key facilities. The Kwinana Alumina refinery has been permanently closed, while the Poços de Caldas refinery has ceased non-operating bauxite residue areas. Additionally, the San Ciprián smelter is operating at only 29% of its total annual capacity as of September 30, 2025. These concerns highlight the need for the company to reassess its inventory management and supply chain strategies to mitigate potential losses and ensure business continuity. That concludes the financial summary for ALCOA CORP. Feel free to comment below, and I will be happy to answer them when possible.